This is Alan Bush with the Daily Financial Forecast for Tuesday, August 9th. Starting out with the stock index futures, we are seeing prices just a little bit higher today. Some of this may be linked to energy prices, or at least crude oil prices that are a little bit better. But I think the dominant influence is interest rates are very low, likely to remain so for a very long period of time. And I think that will be the fuel that continues to sustain this bull market in stock index futures. So look for higher from current levels, higher longer term. Now moving over to the currencies, the dollar index, a little bit lower today after some recent gains. However, we do believe that the dollar index will gradually work higher since the U.S. Federal Reserve is the only major central bank that is likely to raise interest rates. Probably not this year, but maybe next year. Other central banks are either adding more accommodation or are on hold. So the dollar index will probably drift higher longer term. Also, we are seeing some pressure in the British pound. This after industrial production numbers in the UK coming in with an increase, but not as strong as some had anticipated. Also, we had a Bank of England policymaker indicating that, in his opinion, lower interest rates in the UK are needed. Also, more QE is needed as well. So that put pressure on the British pound. And we continue to believe that with more accommodation likely from the Bank of England, that the pound will probably continue to work lower. Also, the Canadian dollar and Australian dollar is a little bit better with energy prices somewhat firmer. Also, it does appear that the Reserve Bank of Australia is unlikely to lower rates again anytime soon. So that is supportive to the Australian dollar. So I would have to expect a sideways higher market for the currency of Australia. Now, moving over to the interest rate futures markets, we're seeing the bonds a little bit better. Thinking, though, that inflation will gradually become more and more of an issue. Not much of a problem right now, but it will be. So any 2 full-point rally in the bonds, I think, should be used as a selling opportunity. Also, we do believe that crude oil now has probably bottomed. We are hearing that there are near record or record short positions by funds in the crude oil, so we would like to take the other side of that. So crude oil will probably advance from here. Also, precious metals, we remain very bullish on gold and silver. With our inflation theme, the dominant factor that we believe will take the precious metals higher. So any breaks in gold and silver should be used as buying opportunities. This is just the beginning of a multi-year bull market for both gold and silver. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.